Hello, everyone. Welcome to another Mortgage Leadership Outlook, coming to you live every Wednesday at 4 p.m. East Coast time, 1 o'clock Pacific time. With me today, I'm so excited to have Michael McAllister, the founder of Empower Funnels. But this is a guy, actually, we had him on because something. So Michael was an originator. He's been in sales for multiple different companies, multiple different products. But Michael has hacked the sales process. I mean, let's call a spade a spade. That's why I had him on. He talks about funnels, and funnels is a part of it. I always like to, I don't like to, paint someone into a corner because people think funnels, they think of actually a plug-in system there's a lot more to what Michael does. Michael, so do us a favor, for everyone that's watching that doesn't know who Michael McAllister is, doesn't know Empower Funnels, give a little introduction to who you are.
Awesome. Well, Andrew, thanks for having me on. NMP team, thanks for having me on. It's great to be here. My name is Michael McAllister. I am a former mortgage originator. Really just a sales guy in general. Before mortgage, it was car sales and gym memberships and video surveillance equipment and some other stuff as well. An originator that got in the business young enough that I felt like I had a little bit of a disadvantage when it came to chasing real estate agent partners, and maybe I gave too much credit to that, but I allowed that to lead me to kind of what you said. How do I hack the sales process? How do I hack this process of getting business in the door without necessarily working with real estate agents who I didn't necessarily relate to because we had a generation apart from each other. Couldn't necessarily put together a value proposition that was appealing to somebody that was, a generation older than me, saying, "Hey, trust this 21-year-old kid with your commission. I promise you it'll be great."
Whoa, hold on for a second. No. Yeah, you can't just gloss over that. So wait, you're 21 years old when you got in mortgages?
Yes. Actually, I think, yes, I just turned 21. So my birthday was April 15th. August 1st was my first day at Bank of America.
Okay. So, okay. Now, so your first day actually is you're 21 years old working at Bank of America. How'd you get a job at Bank of America? And now your first job was in mortgages?
Yeah.
Bank of America?
Yeah. So my first job was as a I believe they called it an HMC, home mortgage consultant. And basically, I was in car sales at the time. I sold a car to a guy named Jesse Allen. So Jesse is now like one of the biggest executives for what's the big reverse mortgage company? AIG? No, not AIG. The big, you know what I'm talking. The big reverse mortgage company that everybody.
AAG.
AAG, they buy up all the ad space, right? No advertiser in the reverse mortgage space likes them, right? But they do good at what they do. So, anyways,
he's one of their spokesperson.
Yeah. So he's one of the top executives for that team. At AAG at the time, he was an executive for Bank of America. I sold a car to him, and I was 20 years old. I'm a dumb kid, and it was writing stuff down on the credit app, filling out the credit app for him, asking him about his income, and kind of had to go back and felt like I was clarifying monthly income when he gave me his number, right? He gave me his number. I thought he meant that was his annual. I said monthly. And he clarified, he's like, "No, that was my monthly income. Obviously I'm not going to speak figures here, but so I'm sitting here, I'm like, what the hell do you do? And how do I do that? How do I get in on that?" Right. So,
show me your paycheck and I'll call my boss right now and quit.
Exactly. It was kind of a situation like that. And, talked to him a ton that day about like kind of what their initiatives were. Like I said, he was on the executive team. So it wasn't a situation where it was like, I'm going to do what you do. It was more of, we've got loan officers that make, this much and whatever, and kind of talking to me about the mortgage business. And we just vibed. And it was, he reached out to me 3-4 months later. He had some stuff going on. Took him a bit to get back to me. I thought I wasn't going to hear from him again. But reached out to me, said, "Hey, I've got a job. We've kind of got two routes. I know which one I picture for you. But I want to give you the option. We've got this junior route and here's what it looks like, or you can go straight into being a mortgage consultant and kind of trial by fire, figure it out." And that's the one I picked. And that was only, I think that was 5 years ago now. Yeah, 5 years ago. So
okay, so I mean that's phenomenal, Like so to connect with him. Now, how far into your car selling career were you at that time?
6 months.
6 months. Were you having success in car sales?
Yeah, I was. I'm not. Yeah, it was quick. In Southern California, they do car sales a little bit differently. Southern California, like most of the country, your internet sales departments, the team that is working internet leads, they're basically call center reps that just set appointments for your salespeople on the floor. In San Diego, a huge chunk of dealership business comes from the internet department, and so they put their stronger salespeople in there. Those guys desk their own deals. They they are going to, they're going to know how much profit there is and how much they can hold and all that stuff. So I went from selling on the floor to selling in that department by the end of my 3rd month in car sales. So.
Wow. All right. So now did you, and now was that your first sales job?
Yeah. I mean, it was my first like fully commissioned legit sales job. Yeah. I mean, I'd had, gym memberships with a crutch and video surveillance equipment that was like a startup environment where I was getting paid more money than I deserved to do shit that I didn't know how to do. Can I cuss on here? Sorry, I didn't mean to do stuff that I do stuff. I'll just correct myself. Right, do stuff that I didn't know how to do. And
censor that, please, later in the edits.
Yeah, exactly. I would say on the car sales side, though, that was my first like, hey, this is you sink or swim, you make money or you go home kind of thing.
So I mean, that's so that was your first kind of eat what you kill kind of scenario. Did you take right to sales? I mean, did you like sales? Like did you feel like you were a natural salesperson?
Yes and no. I'm very type A. I'm very analytical. I'm very like down to business. And that's really good for selling to some people, and it's really bad for selling to others. And it's very good for selling in some arenas and very bad for selling in others. And so I faced a lot of frustration, and that I was never good at the being chummy, rubbing elbows, talking about your family, your kids, all that stuff. I never was very good at that. I never was interested in being good at that. I just always felt like there was a quicker, more direct route to getting everybody what they wanted at the end of the day. And so I think that I was always told that I would be good at sales based on my ability to kind of communicate and relate with people that were older than me from a young age. But when it came, I think that was from people that didn't really understand what sales actually was. And when it came down to it, yes, I had some traits that made me able to sell and do things kind of my own way and do things a little bit differently. But I wasn't necessarily that natural salesperson that's going to walk into a happy hour and leave with five leads. You know what I mean? That was never my thing.
Okay. So now, do you believe actually, being a good salesperson can be like taught to anyone? Do you think anyone could be a good originator?
Yeah, I think so. I mean, I think obviously it's going to take more work than others for some, like it's going to take more work for others than it does for some. Obviously, the more naturally you're able to communicate with people, the easier that part's going to come to you. But then at the same time, left brain, right brain, I'm sure something could be said that, about if you're really good at that stuff, you might be less good at memorizing guidelines and problem solving and doing that kind of thing. So really, I think it depends on organizational structure, team structure, role structure, and then the training that's put in place. But yeah, honestly, I have a hard time believing that there's anything that somebody like can't do if they spend enough time invested into it, and have the right resources and are pointed in the right direction as far as what they should be learning.
So what does it take? Let's say someone actually you have someone because you. So by the way, I think this is awesome. You're not only running and power funnels, but you're using the funnels. Like you have a mortgage company that you're actively running. So if someone came to the mortgage company, they have nothing to do with the mortgage business, and they wanted to start today, what are you doing to help them stand up?
So our team structure is a little bit different because of our consumer direct model. So what I look for is good. What I look for is just good quality people that have a good work ethic, and then have the desire to do right by the customer, and the ability to trust me to help them do that, if that makes sense. So like, for example, our first LO that we brought on board, he's been in the mortgage business for a couple years. He doesn't know guidelines. He doesn't, filling out a 1003 is even a challenge when it comes to some stuff, but he's really, really good at being a customer advocate. He's really, really good at getting the customer on their side, and then bridging that gap between me, who doesn't want to deal with the customer, and the customer. And I know where his heart's at all times, right? He's not a wild card. I know what I'm getting with him. And so as long as I can teach him how to work the leads that we generate, and then within our team structure, we have a process for making sure that I, as the loan officer or the structure specialist, am the one actually saying, hey, this is the lender we're matched with. This is the rate that we can offer. This is the guidelines we have to look out for, and the stuff that, we have to look for, et cetera. Then I'm good, right? That's how our team structure works. And honestly, I think I personally think that's the direction that the industry is going to kind of head. It's your people that are going to ultimately save you from being replaced by a retail call center. It's the quality of your people that you have in your branch, and that doesn't necessarily mean the people that know the guidelines the best, in my opinion.
So it's basically, when it sounds like it's more about the people who have actually the things that you originally lacked, like the ability to kind of connect and talk about, so Michael McAllister wouldn't be able to get into the business today. Do you feel like that's accurate?
Under my team structure, yeah, no, I wouldn't hire myself. No, I wouldn't. Well, I mean, don't get me wrong. Like I give myself, I'm not giving myself back then enough credit. I might have been able to interview well enough to bullshit my way in there, but if I would have known me, then no, I wouldn't have hired myself. And and the reason why is because you don't need everybody on the team to have different ideas of how to structure the deal and do that. Like, you don't need that. You need one person. You need somebody that's really good at that, or a couple of people that are really good at that, and a funnel to make sure that by the time a file is in front of them, that they're dealing with the right ones and spending their time wisely, and that it's kind of being filtered before it gets to that person, in my opinion. And I feel like, honestly, if I had somebody like me working for me, I'd butt heads with them too much. They would be too concerned about how to structure the deal and how to do, and why is the rate this and why can't we do this? And it's like, no, just shut up and do your job. Like, you go talk to the customers and I'll handle my part.
Can you listen? I know what a funnel is. We develop sales funnels. It's part of some of that we do for our clients and for ourselves too. But explain what a funnel is. Specifically, in terms of a deliverable, and then more of like the sales strategy of a funnel.
Yeah. I think, honestly, Empower Funnels was probably the worst branding decision that we ever made. And we're still trying to figure out how to undo it. When we decided on this name in the very beginning, the word funnels was still exciting. It was still a buzzword, right? Yeah. And kind of what you alluded to at the beginning of the call is that you don't want to paint people into a corner because you hear this word, right? Well, that's kind of what happens. And when we decided on the name Empower Funnels, what we had in mind was viewing the entire sales process as a funnel, and not necessarily the deliverable part of it, right? The process of casting the wide net at the top and having automated systems or methods of being able to identify who's going to the next step, and then who's going to the next step. And then what we kind of coined at the time of what we called was funnel focused selling. And the idea of funnel focused selling was designing your sales process around reaching the next step of the sales process, and not necessarily not necessarily thinking about, so for example, in the context of mortgage, if I've got a lead that I'm engaging with, too many loan officers are already thinking about qualifying that lead and whether or not they can get a mortgage. But that's not the first step that you should be, that's not the first step that you should be focused on, right? The first step that you should be focused on is getting them engaged, getting the, not just a response from the lead that we do with our automated system or whatever, but an engagement. Get that dialogue opened up. That's step number one, right? And then step number two, no matter what, is application.
So, not to cut you off there. So no, before we, so talk about what does that engagement look like? So if someone's watching this, what is that first? What are those kind of engagements that they could have? And by the way, take notes if you're watching this. You need to take notes because he's spilling the beans right here. This causes actually for you not to even have reason to hire and power funnels, but obviously we all want the shortcut and have someone do it for us. But tell us actually. So that first point of engagement, what are we doing to get that?
Yeah. So. Right off the bat, so our first question when we get somebody that inquires on an online form, the first step of our funnel is the Google ad. We do everything with Google search ads. We don't do anything with Facebook ads or any sort of media buying. Google search ads. So that's the first step. They search something, they click on our ad on Google, then they land on this landing page. They fill it out, right? Go through this lead form that has 10 to 12 different questions that they're answering or whatever. So at this point, they already should have a fairly high level of intent. The nature of internet lead gen is that people go online to get questions answered and not to talk to a loan officer, though.
Yeah.
So for that reason, that's why you have to add that automated follow-up and engagement. So as soon as the lead comes in, we're adding these leads to an automated follow-up sequence that includes ringless voicemails, text messages, and emails. That's going to get the response for them. Right? We tell our customers, don't touch a lead until that lead has responded to that automated follow-up. Now, the nature of that initial response is almost always based on how we structure our automated follow-ups, identifying why they reached out in the first place. So they're going to tell us right away, like, hey, we're asking them, hey, were you just looking to get an idea of what you could afford? Or were you looking to, or were you looking to get pre-approved for a mortgage kind of thing? Or are you just looking for a basic idea of the process? We kind of give them some options. They identify right away. So that's the response. The engagement piece now is transitioning from, all right, I know that that's what you were trying to get out of it. Here's what I need to be able to do so, and opening up that dialogue back and forth. So if somebody says, hey, I'm looking to get an idea of what I can qualify for, well, the best way to get engagement is and you're kind of our first step is, great. Do you have a few minutes to hop on a quick phone call so I can get you what it is that you're looking for? If I can get them on the phone call, that's an engagement. If I can get them to text back and say, hey, no, I'm sorry, I'm at work right now, I can call you at this time, that's an engagement, right? Like that's what we're looking for. Exactly.
You want actually that, even the I'm too busy right now, let's talk later is an engagement. You just want them to, you want to feel that there's a pulse there. That's all you want. As soon as you know there's a pulse, you go in for the blood.
Yeah. Not only is there a pulse, but now that these guys know that they're not getting their information delivered to them online and they know they actually have to talk to a salesperson to get those questions answered, are they still interested?
Yeah.
Right. That's the big thing, because in internet marketing, unfortunately, in any marketing, unfortunately, we have this thing that we call the least common denominator, which means like where you're marketing, whatever the people that are spending the most money are doing, you kind of have to fall in line with that, right? We have customers that say, so what I mean by that, like when we're generating leads online, a lot of customers, we've had customers in the past that would like the leads to be a little bit more qualified before they actually fill out the lead form, right? And so, what that could look like essentially is having them watch a video or something before they fill out the lead form, and kind of like pre-filtering a little bit. Well, the problem with that is that if Quicken Loans and Lending Tree and Rate Marketplace and all these other, and Zillow, if they make it easier for them and make it appear as if they could give the information without them watching that 2-minute video or without them reading that article or whatever, then I'm screwed. I've got no chance.
What a dance. So you want to know, WWQD, what would Quicken do? Like that's like, because there's no one better at working the leads than
they're the standard.
Yeah. So, but you want to know what they would do, but you want to like find that space where you can kind of like, be push them a little further without losing them. So you making them watch videos before they get to the lead capture form.
We won't do it. And the reason why is because when we've tested adding those kind of steps, that cost per lead skyrockets in a disproportionate way to the amount that it actually improves your conversion. So, and again, we call that the least common denominator, right? If like we cannot make it harder for them to fill out the lead form than the other companies that are doing exactly what we do are doing. Like you just can't, or you won't get the click-through rates, you won't get the cost per conversion that you're looking for, and ultimately you won't get the lead volume and the results.
I mean, so listen, there's a lot to unpack there. It's great to know actually that you're sharing this stuff. I mean, I'd love to actually have access to some of your scripts to share them, but like you just said something that just I don't know what made me think of this and why as me going back to thinking of the Michael McAllister, when you're like 17, 18 years old and you're getting out of high school. Did you actually think that you were going to be, a mega success in, sales and in financial services? Like, what did you think actually of, what was your opinion of yourself back then, when you were wrapping up high school?
Honestly, that's a great question. And I haven't had that question posed in a long time. And to be honest with you, I've reflected on things along these lines the last couple of months. And to be honest with you, I think that I cared too much about what other people thought of me at the time to have any idea where I was headed. And I think that, that manifested itself in kind of like some stuff that happened the next year after that. But yeah, I think in general at the time I graduated with like a 4.2 GPA. I was top 5% of my class, right? Like all this. Wow. But I went to a junior college to play baseball because somebody somewhere gave me a shot to play baseball in college. And it wasn't that I loved baseball. It's that it was the most difficult thing for me in my life to be good at. And somebody had said that they believed in me enough to pay me to go to a junior college to do this. Yeah. So, one of my best friends and, same ACT score, same class, same spot in our class and whatnot, maybe a little bit more. He did some more volunteer stuff, but he ended up going to Harvard while I'm going to this JUCO to play baseball. And I think that's a perfect example of just kind of how lost I was at the time. And knowing that, hey, like all I knew is that I wanted to be successful and I didn't know where it was going to be. And I didn't know why I wanted to be successful. Looking back, I realized it probably had to do with what I thought, how much I cared about what other people thought of me.
Yeah.
But no, I definitely at no point was like, hey, this is what I'm doing. And I mean, shit, when I was 14, I said I wanted to be an anesthesiologist or whatever, because on career day, that was the one that had the highest income on the list. So I was
I'm with you, man. That's great. So when did you all of a sudden say, screw this. I don't care what anyone else says. I am focused on myself. I'm focused on what I want to do for myself. Like, so when did that point hit? Was it before you got into sales, or like what was that moment?
Honestly, I recently, like within the last year, 2 years, I would say. I think that all of this stemmed from getting, well, and we can dive into this, but getting kicked out of school, right? When I went to that junior college and got caught with some of the devil's lettuce, I got kicked out of school. I got charged, I got criminally charged and scholarships revoked and whatnot. It was a big deal in my life. And, and I think I was still so wrapped up in what other people thought of me that I like told myself at that point that I was going to make sure that I didn't regret it and that nobody could look back on that later on and say, I'm sorry that happened to you, or you messed this up, or, what have you. Like, I was just so obsessed with not wanting that moment of regret when I was 30 years old that I dove into it. And it wasn't until the last year or two that I've like learned enough about myself to realize like what fueled all of that, and kind of have refocused, you know, my direction and my goals around that.
Wow. Wow. That's powerful. That's powerful. I mean, it's you know, to know you have that kind of transformation. Now, what does that mean to you today? Like, how does that change you in what you do today and how you conduct yourself and how you know, work with employees?
It's just a content. It's just a level of a state of positive discontent is what I would refer to it as. It's a state of like being, it's a state of being in 100% alignment with who I feel like I am and I want to be, and feeling like I'm doing exactly what I should be doing right now. And I feel like that's the biggest thing is what, like, I've gone through a lot of my life constantly looking forward to what's next. And when this happens, I'm going to be happier. When this happens, like, you know, things will be good and all this stuff. And I think that, over the last year, like kind of a year or 2 years, what I've realized about myself is like, hey, that's the journey, the chase is what makes me happy. And I get a lot of fulfillment out of that. Not necessarily everybody in my life is going to get fulfillment out of that. And so I've got to be able to organize my life around making sure that the people in my life that I care about get what they need from me, and I can still get what I want, which is just the ability to create and grow. And I think that does come through when it comes to, I think that does kind of shine through when it comes to our employees and how we develop people here, both on the mortgage side and on the marketing side, is, you know, we work really, really hard to try and help our people get to at least be on the path towards that, to identify, okay, what is it that you want from this, right? We might sell this company in 3 to 5 years. I don't want this to be a 10-year plan for you. What do you want? And how can we help you get there in the context of something that's going to help us get to where we're trying to go too? And that's our culture from top to bottom. And I think that really stems from me not really having any questions in my head as far as where, you know, what I feel like we should be doing. I just feel very confident that we're doing exactly what we should be.
Wow. That's great, man. So listen, what we started the Mortgage Leadership Outlook series, you know, at the pandemic. We did this actually so we can talk to leaders like guys like yourself that were doing really wonderful things out there, and just to kind of know what we should be telling our employees, our borrowers, our communities. So tell us, like, you know, what has gone on in your life, you know, since, you know, March. Let's talk about actually, you know, like where actually, you know, you were personally, and you were, you know, from the company, and when did it like go off saying, I got to get back actually in the mortgage business? So bring us back to March and then take us through to today.
Yeah. So, so the mortgage licensing stuff, we had already submitted for that. I think back in November is when we submitted for that. So that was already in the works. The obviously question marks were raised in March as to, you know, when we did get that call from the Department of Finance that said that we were going to be good to go. There were obviously question marks at that point as to whether or not it made sense for us to do it, because we were running this consumer direct model, and because our model inherently had to start with a capital investment. So there was definitely that question that kind of popped into our head at that point. Yeah, March was a weird time. We sent the team home probably a week and a half before the mandatory stay-at-home orders were here. We had an employee come in and coughed one time, and everybody in the office like flinched, and it was like, all right, let's send everybody home, right? Yeah, no, everybody was. You could just tell that people were on edge about it. Nobody knew what to think about it yet. So we sent the team home a little bit earlier than some of the people. Some of the companies were lucky enough, obviously, to have an internet company where we can work from home.
Yeah.
And honestly, it was kind of a whirlwind those first few weeks. I mean, I think that we had a lot of loan officers that were really scared all of a sudden, because that capital markets were tightening overnight, and they were getting loans that were, falling out because of guideline changes, or even worse, like borrowers that were getting laid off. And this shit started happening in a period of like a week.
Yeah.
And so there was a week there where we lost like 3 or 4 clients. I think we were at like 60, 65 clients. there was a week there where we lost 3 or 4. Our average retention is about 92, 93%. So it wasn't like more than we would, but it happened quickly enough, and they all cited COVID. So we're a little bit concerned, but we jumped ahead with the messaging from the get-go. Like from the get-go, as soon as this started to happen, we jumped out and we said, hey, look, the best the companies that took the most market share in the recession are the companies that doubled down on their marketing. This is what we've been waiting for, right? Is that opportunity to take market share. And we jumped ahead of the messaging with our clients, and we were extremely vocal. Like our email marketing was virtually non-existent before COVID. And once COVID hit, we just made it a point to, all right, we're going to make sure that every one of our customers gets more out of this system than they ever have. We'll still try and bring on new customers, knowing that pipeline is probably going to slow down, but we're going to over communicate with everybody involved so that there's never a question mark as far as what our position on this is. And so because we took that approach, and I did believe in it, when it came to the mortgage company, it was kind of like, it's time to put our money where our mouth is, right? It's like no, what better opportunity to show how much we believe in not only our messaging behind COVID, but this service, right? This product that we offer. What better time to show that than when everybody else is running for the hills? And I mean, there were a couple of weeks there where I was as a leader of a company that has all these, has 6 different families that are dependent on income from us, right? As the leader of that, yes, I looked at when I saw the PPP get announced, I started looking at, okay, how can we process PPP loans, right? How can we take applications and broker PPP loans? Because I know that doesn't take the same life. I started, and honestly, it was over the top. It was way over the top. Like I drove myself crazy for like 4 or 5 days straight of, I know there's opportunity here. Where is it? I know there's opportunity here. Where is it? Calling every entrepreneur friend I know. I've got a friend down in San Diego who owns a technology platform for brokering personal loans. And so he was like, we're talking, and like I said, it was like it was like 4th or 5th day in that I was like, I just need to chill out. I need to settle down, right? Shit might slow down, shit might slow down a little bit, but we're doing the right thing. We got to make sure our customers continue to get results, and we'll be all right. And to be honest with you, that month that month of March where we had so many people stop in a short period of time, we came out when we saw that, as soon as we saw that, we came out and we said, hey, our standard offering is about a $1,500 a month commitment, right? $750 for ad spend, $750 for everything that goes along with it.
Yeah.
We cut that. We basically cut both of those numbers in half for anybody who didn't feel like they had the $1,500 to invest. We said, hey, look, we'll drop your monthly commitment from $1,500 to $750. The deal is, though, we're dropping our management $375. You have to invest $375 into your leads. We believe that strongly in our messaging here that we're going to take money out of our pocket to put it back into yours. And that kept a lot of clients on as well. Honestly, our retention, that month, our retention was about average. And then every month since then, our retention is between 95 and 98% better than it's ever been.
Amazing. So what do you think mortgage companies should be paying per lead? So let's say they're not using your system. So just generically out there in the industry, what is a good cost per lead for mortgage companies to be paying right now?
Oof. Yeah, that's loaded. I would almost almost flip that to a cost per closed transaction.
Yeah.
And then just make sure that you're accounting for labor costs within that cost per transaction. Because that's the only way to control all the variables and make sure that you're comparing apples to apples. If you look at leads coming from different source, obviously have different qualities associated with it. They have different levels of intent associated with it. Are you buying shared leads where you're having to shop and drop your rate? Like how much margin can you hold, et cetera, et cetera. Our customers expect their cost per closed loan to be between $500 and $1,000 per closed loan. That is I would say half of our loan officers make 130 basis points or less. So that margin makes sense for that individual loan officer. And that's with after tax dollars for a lot of these guys too, because a lot of these guys are W-2 employees. They don't get to deduct this stuff anymore. So now all of a sudden you look at a mortgage company and they're going to have more margin. It's before tax dollars, et cetera. So I mean, like I said, I think that for us as a brokerage, if our cost per closed loan stays under $1,500 from a marketing standpoint, then we'll continue to invest in that marketing source.
That's great. So up to $1,500. What's the lowest you've seen? Like when is actually, has there ever been a sweet spot where you've gotten actually, because you figured out some kind of a hack or something actually, where for a little bit of time you found actually, oh, wow, YouTube videos is converting unbelievably. And like where you got actually, to like a $500 per closed loan or at least under $1,000.
Yeah. No, we, as far as channels goes, if we felt like there was anything better than Google search ads, we'd be doing it. So Google search ads, 100%. What it boils down to as far as cost per closed loan is going to be like what the cost per lead in that market is, because it can range right now anywhere from like $3 a lead to like $9 a lead. During normal times, $7.50 to $10 a lead. So cost per lead is going to have some influence on it, but really, it's going to boil down to like conversion practices. So like right now cost per lead have dropped so much because I feel like companies, search volume is up. People have more shit to like more time to do, like do stuff. Right. But B, a lot of your bigger consumer direct companies are pulling back on their spend because like, for example, Quicken Loans, who's going to account for the majority of that spend, their pipeline is so filled with refi business that their LOs are probably saying, why the hell are you still sending me leads? Right. So that's created an opportunity where now we get leads for $2-3 a lead. Well, normally our benchmark for conversion rate is about 3%, but our customers are getting 2 to 3 times as many leads for the same cost that they would normally invest, right? They're getting 200 to 300 leads for the same cost that they would normally invest for 100 leads. So what this does is it creates kind of this choice that they get, because a loan officer cannot effectively work, even with automated follow-up, cannot effectively work 250 to 300 leads in a month. Like you're not like the point of diminishing returns is going to be, 200 tops. Yeah. You get higher than that, there's going to be diminishing returns. And so what they decide at that point is, okay, do I want to try and get as many as I can? Or B, do I want to exercise some level of cherry picking in when I identify which leads I'm going to work, what way, how much time I'm going to invest, et cetera, because we collect that 10 to 12 question lead form where they're saying self-reported FICO, income, et cetera. So what we did, because my partner's a freaking data wizard, is we went back and we said, okay, these are the lead attributes that are most likely to result in a closed deal. Mm-hmm. And we've communicated these with our customers and said, hey, look, here's some template text messages to try and get an application from somebody if they fall outside of this category. Yeah. If they fall in this category, work the lead as normal. And so what we've seen is although conversion rates as expressed as a percentage of total leads has gone down, the cost per closed deal has gone up, the profit per closed deal has gone up, the time invested per closed deal has gone down, right? All of these ancillary benefits that come from that. So unfortunately, you don't get the benefit of that until you have a marketing channel where you're at that $500 to $1,000 cost per closed loan level. Yeah. That's when you kind of get to make those decisions of like, all right, how much is my time worth? Is it okay to let 1 or 2 slip through the cracks if it means that I'm optimizing my time a little better, et cetera, et cetera. So, and that's one of the beautiful things about what we do is we're able to look at each loan officer or broker's individual business and what they're trying to accomplish with this and what their tolerance is for cost per closed loan and tailor our conversion strategy sessions to that strategy.
That's great. What's the biggest mistake that you see most mortgage companies make when they're running ads on Facebook? Or I'm sorry, on Google. On Google. On Google.
I was like running ads on Facebook.
So on Google, where's the biggest screw ups that most mortgage companies make when they're trying to run Google ads?
Not understanding search psychology. not understanding how people use search engines.
Okay.
So most companies, like especially at the company level, right? When you get down to the loan officer level, you've got some smart LOs out there that kind of question the logic behind this approach.
Yeah.
But most companies are just going to hire an outside agency or going to use their, fresh out of college, marketing team to put something together, and they're going to read every book they can on AdWords, and they're going to come up with a strategy that will not work. And what it is it's essentially trying to identify a key handful of phrases that people are going to search in your market and being highly competitive on only those phrases. It just doesn't work. Any phrase that you would try and identify like that is going to have a cost per click of close to, of anywhere between $3 and $10 and maybe even more. Well, if you do the math, we're getting leads at $3 to $4 a lead. Our landing page conversion rate is about 20 to 25%. So that means we're getting clicks at what, 80 cents a click, 80 cents a click. So if you're getting cost per clicks that at a 20% conversion rate don't equate to a lead less than $15, you're doing something wrong. And usually what that is trying to identify those searches versus like what Google would never recommend to you, but is the right way to do this, is a actively managed broad match strategy. And what that means is, hey, instead of trying to guess what people are searching in this, I'm going to cast a really wide net, allow Google's AI mixed with my conversion tracking to determine which searches are going to turn into leads or more likely to turn into leads. And then I'm going to take a look at what people are actually searching. There we go. Are we going too far in the weeds here?
Well, no, I'm with you so far. I'm just like what kind of terms? So you're casting a wider net, letting the AIs and Google's AI saying, okay, what's clicking, what's converting, is it just simple as mortgage? I mean, are you like?
No. So that's okay. So going back to the search psychology, and so 10 to 15 years ago, if somebody searched for mortgage information online, what they were searching for was somebody that they could talk to, that they could get questions answered. Right. So when they would go online, if somebody was looking for a 0 down mortgage, they would search 0 down mortgage, and then they would find somebody who's advertising a 0 down mortgage and pick up the phone and call them or fill out their lead form. That was the process. Okay.
Seems logical. Yep.
Nowadays, it's completely different because of smartphone adoption and because of voice, like voice search and voice AI and stuff like that.
Yeah.
People have a higher expectation as far as what is delivered from their smartphone and what is delivered on their search. Okay. And it's made them lazy in the context of what they're searching. So whereas 10 to 15 years ago, they might search for best mortgage company in Boise, Idaho, so that they could find the one with the best reviews and call them. Nowadays, instead of what they're going to search for is, how much house can I qualify for if I make $130,000 a year, have a 690 FICO, and have $14,000 for a down payment? Like, wow. 85% of our searches are in a 30-day period of time for all of our leads, and we generate tens of thousands of leads a month, right? 85% of our searches that result in leads were only searched one time.
Wow. So are you suggesting actually you put a long tail search query like that, bracing all the parameters on?
So that's the broad match side of it. So by using a broad match strategy, Google will automatically place those in contention. So if I put mortgage pre-qualification as a broad match keyword, then Google is eventually going to find the people that fit within that, right? Show them the ad, and it takes a little time. We don't take the time to figure, we don't let the campaign do its thing on an automated basis until it figures it out. Like, we know the shortcuts to be able to say, hey, we're going to do this on we're going to bid on manual cost per click basis, which means we're literally going to individually pick our bids for all of these keywords to get the campaign off to a fast start and let Google start to see those conversions come in. And then at some point we flip it to an automated bidding strategy where Google says, hey, I have enough of this data to go out and find you more leads at a cheaper cost. So,
okay, elephant in the room, you have a mortgage company. You're getting all the leads, like all the best leads. Is that how does it, because I would listen, maybe you're a better man than me, but I'm running a mortgage company, a lead company. I'm going, all right, guys, here's actually the best leads, and whatever's left over, which are probably still good leads, we're going to sell to our clients. So tell us actually, what's the strategy behind that?
Yeah. So we, honestly, it took us as long as we did to start the mortgage brokerage, because we wanted to be able to start it at a point in time where not only did we have the technology and the infrastructure to like prove to our clients that that's not what was happening, but our clients, like, we had enough rapport and trust established with our customers that they believed that that's not what's happening as well. So a couple things. We blacked out the Idaho market, probably 8 months to a year ago, where we said, hey, we've got one client in there. If that doesn't work out, we're not bringing on any new clients, just in case, right? Just in case we partner with somebody locally, just in case we do this.
That's awesome.
We only got our license in Idaho. And one of the things that I'm having to tell loan officers as I recruit is, like, if you want to originate outside of Idaho, you can't do it with us. And the reason why is because we don't even want the possibility of that perception. In addition to that, our infrastructure is such that every one of our customers has their own ads account. Every single one of our customers has their own landing page. Yeah. Every single one of our customers has the data to be able to see who hits that landing page, goes all the way through the lead form, et cetera, right? All of that stuff, like the ownership, the level of ownership that they have in that process is such that it would, like, for anybody who knew anything about looking at that kind of stuff and interpreting, there's zero way for us to game that.
Which, by the way, like, and I'm just being that jerk, like that devil's advocate jerk.
I appreciate the question.
I'm from New York, and like, we're just skeptical of everyone. We think everyone's an a-hole. To me, actually, in my mind, it also means that I'm part of this larger thing, this larger organization, that is learning, that's tweaking the system. So, like, when one of your clients wins, and obviously the client, one of your clients is you. One of your clients wins. We're all winning because we're all learning, because your goal is to have more and more successful mortgage companies. The more successful your mortgage companies are, the more actually they're going to spend, the more actually they're going to actually, to tell actually others about it. So I get it. Yeah. I get it. Makes all the sense in the world. So, dude, awesome. By the way, so, I mean, we really don't like to advertise stuff on here, but, Empower Funnels got a free live demo. Check it out. I just put the URL up there. So check it out. Actually, if you can, the short URL is up there. Michael, it's really awesome to hang out with you, like, get a little bit actually history. I love your, just kind of like, the hardcore, mortgage guy that you are. There's no censoring. That's for sure. There's no censoring.
I tried. I tried to censor. I tried.
Dude, it's okay, man. We're all adults here. I just, I appreciate actually, the dialogue, and I'm totally okay with actually everything that you've revealed. And listen, when we have guests that just speak from the heart, and that's all they know to do, we're going to drop a couple of F-bombs. It's just what's going to happen. So, Michael, thank you so much for joining us. I really, really appreciate it.
Yeah, Andrew, thanks for having me on. Anytime, seriously. Anytime we want to talk something else. I know that we digressed quite a bit. There's plenty that we could talk about. So anytime, I'd love to be on.
Fantastic. Stick around while I take everyone out here. So, everyone, thank you so much for joining us for another Mortgage Leadership Outlook, coming to you live on Facebook, YouTube, LinkedIn, Twitter, and anywhere else that will have us. Coming to you live every Wednesday, 4 o'clock East Coast time, 1 o'clock Pacific time. Thank you so much. We will see you next Wednesday. Stay safe.